Hey guys, Dylan from Twin Finance. Today, I'm going to give you my top three April 2018 stocks to buy. Before I get into any of my picks, guys, I'm just going to tell you real quick that I don't expect these stocks to go up 1,000% this month or even grow crazy this month. These are just stocks that you should be accumulating this month for moderate to long-term growth, because I'm a moderate to long-term growth investor. I don't like short-term trading like every other day or week or so. That's not me, guys. So these stocks I'm predicting to be good over the long run. So my first stock is Newell Brands. And this is a consumer goods company. They're in the sector with Procter and Gamble, etc. Other consumer good companies. First thing I like about them is a low PE, guys. Right now their trailing PE is a 4.53. This is it is very, very low right now due to the massive tax cut they got right now. But even if you took out their, I think they got 1.3 billion tax cut, which is massive, guys. But even if you took that tax cut out, it's still at like an 8 to 9-ish PE. That would be a forward PE. The second thing I really, really like about this company, guys, is Icahn and Starboard Value. And Starboard Value is a hedge fund. Many of you guys probably know who Carl Icahn is. He's a really big investor. He's been around for decades, guys. And the reason why I like this is both of them. Icahn has the majority stake. It's right around 7%. Starboard Value has like a 5% stake, and they're both in like strong action, fighting over this company right now. They're fighting with management and stuff because they know Newell Brands is not meeting their expectations right now. And they both right now are guaranteeing like 300 million easy, maybe even more. They're guaranteeing massive growth in earnings over the next few years, guys. The third thing I like about this company that I didn't write down, they do pay like a 3.5% dividend yield, which is very strong, guys. So if you're a long-term investor, moderate to long-term investor, that's going to be really helpful for you guys. So this is my first buy. Okay, guys, my second buy is Ventas. And now Ventas is a real estate investment trust company. Now, this is another one I don't think is going to go up massive this month. This is another one that you should continue to accumulate if it stays at a low share price for growth over the long haul. The first reason why I like this company, 6.4% dividend yield if you round that number, which is massive, guys. And I'm not saying, hey, go out there and buy all the high dividend paying stocks, because you're not going to ever want to buy a stock just for the dividend. And that's why I like Ventas, is they have a high dividend, but they have a few other reasons why I like them. The second reason is another low PE. It's at 13. Their forward PE is even a little lower than that. They're expected to increase earnings. The third reason why, and this is my favorite reason why I like this company, is healthcare. And they're a real estate investment trust company, like I said, but their main investments go into healthcare, real estate. And right now, guys, with the aging American population, aging population, and the baby boomers, they're getting older, guys. So you know what that means for healthcare is we're going to need to start building a lot more healthcare facilities for the aging population, and that's really big for Ventas. So I think over the long haul, maybe the next 3 to 10 years, you're going to want to buy and hold this stock, and it will perform well for you over the long run, guys. Okay, guys, the third stock to buy April 2018 is Facebook. And now obviously everyone knows what Facebook is. The reason why I like Facebook right now is because you guys are probably thinking, like, why the heck would I buy Facebook right now? Like, the company, there's a lot of heat right now about like information being released, but don't worry, guys, that'll settle down. And their stock just took a quick dip, so that's why Facebook, I think, is a good buy right now. They're at a sick value. But the first reason why is 5-year growth. I don't know if any of you guys follow Facebook stock, but go to their 5-year chart. It's pretty much immaculate. It's literally it is a straight growth stock. Like, this is the first major dip that their stock has seen in a 5-year chart. The second reason is developing countries. So now, as more countries, such in Africa, in third world countries, the more they develop, the more popular Facebook's gonna get. I remember when Facebook first came out, social media first came out. First thing I got was a Facebook account. It was crazy. It was the best thing ever, right, guys? Well, that's the exact same thing developing countries are going to go through. So developing countries are going to get social media, they're going to get Facebook, and that's just going to continue to grow Facebook like crazy. It's already international, but the growth potential is way higher than it is right now, guys. Third reason why is Mark Zuckerberg, and a lot of you guys probably know who he is. The reason why I like Mark Zuckerberg, I don't know if you guys have watched any of his videos, but you probably should, because This guy's like very, very level-headed. He's always on top of his stuff, and this was his passion, guys. Like, he left university, doesn't have a degree. This was his passion. He followed it. He's never gonna let Facebook he's never just gonna let it go, guys. So I think with his management and all the other like massive markets Facebook's already tapped into, it's gonna continue to develop. This is definitely gonna be a buy and hold investment, guys, and I think it will even give you some returns this month and in the following months and years too, guys, because it's at a sick value. Thank you for watching this video. That was my 3 stocks, guys. I'm not guaranteeing anything, but those are just my 3. That's my top 3 stocks right now to buy. Thank you for watching this video. Remember to subscribe. Take care.